What's up, everybody? So, Jerome Powell and I wanted to do a quick video on that. How's everyone doing today? I'm sorry for the late broadcast. Actually, shout out to my man Bear, because Jerome Powell is about to speak live, and I don't want to miss that. Jerome Powell. I don't want to miss this, so I will be watching this live. One moment. Let me put this on. Okay. Alright. Let's do this. And let's do this. And what's up, everybody? How you guys doing, man? We about to start this. So let me actually do this like this. Let me do this like that. 1 second. We're about to go live. One moment. Let's do this, and then let's do this. Share screen. And then let's do this, and then let's do this, and then let's do this, and then let's do this. All right, guys. It's gonna start soon, and we will watch this. How's everyone doing today? Let me see. What are you guys talking about? Let's see. Let me see. Let's do this. It didn't start yet. Guys, sorry for the last minute. Yo. What's up, everybody? Why is it crashing? Last time it went up, bro. What is it today? This is just, he's going to be talking about inflation. I have no idea what this is going to be about. And yeah, we're going to cover this just like usual. How's everyone doing today? And I'm very sorry for the last minute. Shout out to my man Bear, who actually told me about this live. I wasn't even prepared. So shout out to my man Bear, 100%. Jerome Powell is supposedly going to talk at the Economics Club. And he's going to be talking about inflation and things like that. Hopefully he's not going to rug the market, right? CPI crash. Let's see. Let's do this. 1 second. Caught my eye. Yeah, thank you so much. I appreciate it. Great, my brother. Thank you. Okay, let's hope Jerome Powell pumps today. I hope he pumps today, too. It's going to start in a couple of minutes. I think it's going to start in like 1 minute, guys. What's up, bud? Been working every day in the past 2 days. I'm all good, brothers. I'm all good. I'm just trying to make this come together. I'm trying to set up all of my streams and put the right wording over there. So yeah, Jerome Powell live. Inflation, economy. Okay. 1 second, guys. I'm just trying to get this thing set up. I'm really sorry. Switch accounts. Guys, it's gonna start in 2 minutes, so just bear with me. And then I'll take notes as usual. I'm just setting up my accounts, and then we can talk about it. So Jerome Powell is going to be speaking at the Economics Club. He does this once a year, twice a year, and hopefully we're going to get something out of it. Who knows?
And you might think, what if I fall? Well, what if you don't? What if you're fine?
How's everyone doing? What's everyone doing? You think he's going to crash the market today? Lazy Turtle, what's up? Yo, K-Dog, what's up? I hope everyone's doing okay. Maybe you guys can actually, let me share this on Twitter. Hopefully this is gonna help. Let me see. Let me share this on Twitter really fast. Guys, we have a Discord. We're gonna have poker night this Thursday just for the Discord. It's completely a free roll. I'm paying for everything out of my own pocket, so please support the channel.
So, as I think everybody knows, our special guest is the chairman of the Federal Reserve Board, who has now completed 5 years as chairman as of 2 days ago, your 5th year, and now been on the Fed board for almost 12 years. So, Jay, thank you very much for being here. And why don't we start with an easy question? So, you made a speech last week commenting on the FOMC's decision to raise the Fed discount rate by a small amount, relatively speaking, 25 basis points. Some people would say that was small. But at the time, it wasn't clear that the jobs report would be as strong as it turned out to be subsequently. Had you known that the jobs report was going to be as strong, would you have done 25 basis points or something different?
David, thank you for that question, and thank you for inviting me here today. It's great to be here. So we don't get to play it that way, unfortunately. We have to, but I'll take it this way. So the message we were sending at the FOMC meeting last Wednesday was really that the disinflationary process, the process of getting inflation down, has begun, and it's begun in the goods sector, which is about a quarter of our economy. But it has a long way to go. These are the very early stages of disinflation. So the services sector, really, except for housing services, pardon me, is not really showing any disinflation yet. So our message really was this process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time. Then comes the labor market report for January. And it's very strong. It's certainly stronger than anyone I know expected. And so, but I would say, we didn't expect it to be this strong, but I would say it kind of shows you why we think that this will be a process that takes a significant period of time. The labor market's extraordinarily strong. And by the way, it's good. It's a good thing that inflation has started to come down without it. That has not happened at the cost of a strong labor market. So, and of course, since then, financial conditions have tightened significantly since then.
So let me ask it another way. So, by the way, when the numbers coming out, the jobs numbers, 519,000 jobs, does anybody call you up in the government and give you a little heads up, this is going to happen, or they never do that?
So on some data, sometimes we get data just the night before, and it's only me, and but not on all pieces of data. It's a very small amount of data, and we get it just the night before. For example, if we were going to get a big piece of data in the middle of an FOMC meeting, as often happens on the day of an FOMC meeting, it will help me to know it the night before.
Okay, so the markets, after your speech last week, the markets assumed that therefore there would probably be another 25 basis point increase in your next FOMC meeting. Was that a bad assumption by the markets?
So what we said at the meeting was that we believe that we anticipate, is what we said, that ongoing rate increases will be appropriate. And the reason is we're trying to achieve a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. And we don't think we've achieved that yet. So we said that, and now you see the labor market report, and I think, again, financial conditions are more well aligned with that than they were before.
So the assumption when you made your speech was that probably the Fed might even consider decreasing rates by the end of this year, and the markets no longer assume that. You think the markets are wrong?
Well, so let me say, these are all of these numbers that we're throwing around here are conditional on incoming data and what happens. So we never say this is what we think will happen. We make a tentative forecast and then we let the data come in. For example, if the data were to continue to come in stronger than we expect, and we were to conclude that we needed to raise rates more than is priced into the markets or than we wrote down at our last group of forecasts in December, then we would certainly do that. We would certainly raise rates more.
Okay, so today, for people who aren't familiar with the FOMC, who actually is on the FOMC?
So the U.S. Central Bank consists of a board of governors here in Washington. There are 7 governors. Those governors are nominated by the president and confirmed by the Senate, and we serve terms that are not synced up with the election cycle. So we're independent. There are also 12 reserve banks around the country which have a degree of independence. And so each reserve bank is led by a president who works there full time. All 12 of them sit on the FOMC. So that's 19 people sit on the FOMC. So it's quite a large committee, of which 12 vote in any given year. The Reserve Bank presidents vote on a rotating basis, except New York, which votes every year.
So when you vote, do you vote at the beginning of an FOMC meeting and then just kind of have discussions afterwards, or do you wait till the very end and then you vote?
No, we vote at the end. I mean, the FOMC meeting process takes, more than a full week. I'm talking to all of the participants, all 18 other ones, and staff has sent around memos, and there's something called the Teal Book, which is the staff's assessment of the, of the economy and international economy and monetary policy and all that. Then we have an extensive discussion on the morning of the first day about the economy. Everybody talks about that. On the second day, we talk about monetary policy, and then we vote on monetary policy at around noon on the second day.
So does the chairman of the Federal Reserve Board speak first and say, here's what I think, or does he wait until the end and say, well, thanks for what you think, but let me tell you what I think? What do you do, first or last?
Different chairs have done it different ways, and so I've tended to do what my immediate predecessor did, I think. Well, this is what I do. I speak last on the sort of the economic go-around. So everyone else talks about what they think about the economy and in their district, for example, if they're a Reserve Bank president. And I listen to all that, and then I give my comments at the end, and I kind of sum up what people have said. And then I speak first on monetary policy.
Okay, so you've said your inflation rate target is 2%. But why 2% and not 3%? 3%, could be tolerable, really. I mean, for most of organized history, 3% is considered okay. Why do you want 2%?
So 2% is the global standard, and that is our objective, 2% as measured by the PCE index. And that's not something we're looking at changing. That isn't going to change.
That's not going to change?
Not going to change, no.
But, okay, so you need to get to 2%, and your goal to get there is by what period of time would you like to get there?
Well, we say that we're using our tools to get there over time. If you look at our forecasts, we expect 2023 to be a year of significant declines in inflation, and it's actually our job to make sure that that's the case. But I would tell you that, with inflation, headline PCE inflation is running about 5%. This is on a 12-month basis. Core is running at 4.4. My guess is it will take certainly into not just this year, but next year to get down close to 2%.
Okay, so 2% is firm. You're not going to get off that.
Yes.
Okay. So the theory of raising interest rates is that it will decrease economic activity and increase unemployment. But you've been increasing interest rates for a while, and unemployment is now at a record low. So what's wrong with the theory? Why is unemployment not going higher?
Well, the labor market is strong because the economy is strong. And as I mentioned, it's a good thing that we've been able to see the beginnings of disinflation without seeing the labor market weaken. It's just that there's a lot of demand for workers. In fact, if you look at the supply of workers versus demand for workers, demand for U.S. workers is now more than 5 million greater than the available supply. And the available supply consists of people who are either working or actively looking for a job. So this was not the case before the pandemic. The pandemic really had left a lasting mark so far on labor supply in the United States. The labor force participation rate came down, and there now is a shortage of workers, and it almost feels more structural than cyclical. So that's a significant issue.
Now, you've resisted, I think, saying what unemployment rate would be acceptable to you, I think. But is there an unemployment rate that you think would moderate inflation such that you would tolerate unemployment at 4%, 5%, 6%?
I guess I think about it this way. We have two goals that Congress has assigned us: maximum employment and price stability. Price stability, as we've agreed, is 2% inflation. Maximum employment means if you want a job, you can get one. So right now, the labor market is at least at maximum employment. Many would say that it is out of balance with more demand than there is supply. So what we're trying to do is get inflation down. We're not targeting a different unemployment rate. We're trying to use our tools to get inflation to come down over time.
In hindsight, would you say that when COVID hit the economy and we injected $5 trillion of fiscal policy into the economy, and the Fed did quantitative easing and other related things, kept interest rates very low. Would you say in hindsight that was a mistake, or was the right policy at the time?
So I think you have to go back to the decisions that were made in real time, and it was something nobody had ever seen. The global economy came to a virtual standstill. People were talking about depression. People were talking, and we didn't think, we had no idea when we would get vaccines that worked. So Congress took very strong measures, and we took very strong measures. And you see where the economy is. You've got a very, very strong labor market, but you have high inflation. As I mentioned, we're at the beginning of getting that down. If you look around the world, though, at other countries, they're also experiencing high inflation, including countries that didn't do as much as we did, either from a fiscal or monetary standpoint. So that tells you, though, that a big part of this inflation is actually related to the pandemic itself, the shutdown and then the reopening. That's a big part of it.
Now, the quantitative easing program has increased the balance sheet, I guess, of the Fed. And what is your balance sheet now?
I think it's $8.4 trillion.
You must sound like you know. Sounds $8.4 trillion.
That was yesterday's number.
Okay, all right, $8.4 trillion. What would you like it to get down to over the next year or two? Is there some lower number?
So we are in the process of shrinking the balance sheet actively, actually passively, I should say. So what happens is, as Treasury securities on our balance sheet mature up to a cap, a monthly cap, the balance sheet shrinks in that amount. Same thing with mortgage-backed securities as they are prepaid, or so the balance sheet is shrinking. In terms of the target level of it, we haven't put a specific dollar number on it. The idea is we're in a regime of ample reserves. Reserves are basically deposits at the reserve banks. And when we get close to that level where we feel that reserves are ample, kind of where we were before the pandemic, then we'll slow down and we'll sort of test where we are. But it'll be a couple of years, we think, till we get to that level.
The Fed does not sell securities. They waits for them to mature, and then you just cash them in, right? You're not in the market selling securities that are not yet mature. Is that correct?
That is correct. It's also correct, though, that we've said we would consider sales of mortgage-backed securities, but I will tell you that's not something that is on the list of active things being actively considered.
So there are some people that are worried about the federal debt limit, and that we might not be able to extend it on time. We have $31.4 trillion of debt. Are you a little worried about the debt limit not getting extended?
So the debt limit is really something for the fiscal authorities to deal with. The Fed, our only role in this is that we're the fiscal agent of the Treasury Department. We're not a policymaker on that. And I will just say this. This really can only end one way, and that is with Congress raising the debt ceiling in a timely fashion so that the U.S. can pay all of its bills when and as due. That's what has to happen. And if that doesn't happen, no one should think that the Fed has the ability to shield the financial markets or the economy from the consequences of moving too slow.
So you don't have any program in place ready to go if, in fact, the debt limit isn't passed in time?
This is something that Congress has to deal with.
And the so-called trillion-dollar gold coin solution is not one you're in favor of, I guess.
As I said, this ends in only one way,
okay.
And that way is Congress voting to raise the debt ceiling so that the U.S. can pay all of our bills.
Okay. In terms of consultation, do you consult regularly with the Treasury Secretary or the head of the National Economic Council or the President of the United States? How do you kind of relate to the administration?
For a long, long time, 60 or 70 years, I think there's been a weekly breakfast or lunch with the Treasury Secretary and the Fed chair. And that's what I've had with Treasury Secretaries that I've had as Fed chair. I've also had regular, or call it irregular lunches with the head of the NEC. We also have regularly scheduled lunches with the Council of Economic Advisors. And that's really the institutional structure of our contacts with the administration.
So in the way the Fed works today, if you could reconstruct the operations of the Fed, would you change the legislation in any way? Would you think the Fed operates in a way that's as efficient as you can realistically operate?
We're not looking for any changes to the Federal Reserve Act. I mean, I think it does work. The structure that I discussed earlier, where you've got the 12 Reserve Bank presidents coming in, what that assures, really, it institutionalizes diversity of thought. So we get different people coming in who've got different backgrounds, different careers, and they think different ways. And I think that's enormously beneficial to our decision-making process.
So there has been discussion recently about the Fed, some Fed members, Fed board presidents, selling their securities and maybe not doing everything they were supposed to do in terms of disclosing it. What have you done to fix that process?
We put a new system and a new set of rules in place, which I think are best in class for a public institution like the Fed. And the innovations were that if someone wants to sell something that they own or buy something, they have to clear that in advance with staff at the Board of Governors, and then you've got to wait 45 days for that to execute. Also, you can't own individual stocks, and you can only authorize these transactions or execute them during specific times. And we just, of course, all of these are disclosed. If your idea is to trade things, buy and sell them because you think this stock is cheap and that kind of thing, that's just not something that will work.
So what is the salary of the chairman of the Federal Reserve Board?
It's around $190,000, I believe.
Okay, so you live on the $190,000. If you need to sell something, what do? You have to clear it for 45 days? Or?
That's right. If we have family expenses that, if we have them, that exceed my salary, then we have to sell an asset.
You think that's a fair salary for the job, or?
I do, yes.
You do. Okay. So today, how do you coordinate with central banks, let's say in England or Japan or China? Do you have regular conversations with them about what they're doing?
We do, and I meet 6 times a year in Switzerland with the heads of many central banks, even the small and medium-sized ones in Basel at the Bank for International Settlements. In addition, among the major central banks, I have regular dialogues going with most of them, and so what we're talking though about is really what's happening in the economy and how are you thinking about policy and that kind of thing. It's very important that we keep those discussions going because, particularly in a crisis, you're going to need to know each other and you're going to be able to trust each other.
And do you think the U.S. economy is pretty much in control of its own inflation rate, or are there events outside the United States like what China is doing or the Ukraine war that are affecting inflation and make you nervous about where inflation might be going?
We have the tools, the Fed has the tools to achieve our 2% goal over time. But inflation in the United States is, of course, very closely related to things that happen here, including the balance between supply and demand. It's also affected by, for example, commodity prices that are really set on the global markets. Oil and many agricultural commodities are priced globally. So there are certainly, it's an integrated global economy and global markets, and we are part of that.
So you get data from all the various government agencies, but do you ever use anecdotal things like you go to the supermarket and you see prices are high and you say this price is high, or do you ever get anecdotal things, or people ever call you up or friends and say, by the way, you should do this or that? Do you ever get that kind of information, or do you only get it from the government reports?
I mostly get data, but I will say I do believe that anecdotal information is very useful. And one of the things the reserve banks are great at is all 12 of them have big operations where they talk to businesses and nonprofits, universities, every sector of the country and the economy, and they bring that back to the FOMC meetings and they talk about what they're seeing. Because often, staring at data is great, but you need to have a story, and I think hearing the stories that people tell, it does help me to sort of, assess what's going on out there.
So as the chairman of the Federal Reserve is obviously an important job. How do you reduce the stress level you have? I mean, you can't be watching economic numbers all the time. So what do you do to relieve the stress other than interviews like this?
The usual things. I read pretty light fiction, detective and spy fiction. I exercise as much as I can. As you know, I like to ride my bike. I play the guitar, play music.
Wait a second, is that safe, riding a bike? Dangerous? And
It's safe. It's safe if you stay on the bike. And
okay. You're good at that.
That's what I try to do.
And you still play the guitar, or you're still...
I do, yeah.
Your hair is awfully short for playing the guitar. Don't you need longer hair? Was
Yes.
your hair longer when you were younger?
And grayer. It's too gray, too. So.
Okay. So let me ask you about the issue of what it's like to be chairman of the Fed. You can't go have regular friendship kind of dinners or meetings, can you, with people? People treat you much differently, I assume, than they used to, right? When you go to a restaurant, are people listening to what you're saying or something like that?
I have always thought that my jokes were funny, David. But no, so yes, it's I've never been a public figure before like this, and it's very different. But you know, it's a great honor to serve. But yeah, when you go in public places, you have to be very careful about.
And
what you
does
do.
the President of the United States ever call you with any advice, or you don't realize he doesn't? Did President Trump ever call you, or President Biden ever call you, or?
Well, I think it's a matter of public record that President Trump did used to call me from time to time.
Okay. What did he call you?
No, I haven't had that kind of. I haven't gotten any calls from President Biden.
Okay, so the biggest challenge you have now is being able to keep a straight face, not telling people what you're going to do in the future, and look at the data and then come up with the right solution, right? That's mostly it.
I think the biggest challenge we face at the Fed is completing the process of getting inflation down to 2%. And what I want to point out is that we're seeing disinflation in the goods sector. We expect to see it in the housing services sector. And these are the three parts of the core PCE inflation index that we look at. There's 56% of the economy, which is the rest of the services sector. It's the biggest part, obviously. And we're not seeing disinflation there yet. And that's going to take some time. And we need to be patient. And we think we're going to need to keep rates at a restrictive level for a period of time before that comes down.
So when you made your speech the other day, when you talked about the Fed discount rate, you used the word disinflation 11 times. Not that I'm counting, but 11 times. So you were saying that disinflation is beginning to appear. Would you use that word 11 times again today after the jobs report, or you would be less inclined to use that word so much?
I might use I might say I would certainly use the word disinflation, yes, which means declining inflation, and I would call it declining inflation too.
And today, what about the total debt of the United States, which produces some inflation, 31.4, leaving aside the debt limit? Are you worried about the total indebtedness of the United States producing inflation, or you don't think that's a big problem?
Yeah, it's not the level of debt. I would say the thing I'd say about the level of debt is really, it's not. First of all, it's not the Fed's job, but I would say that we're on an unsustainable fiscal path at the federal government level. That has been the case for some time, and it's something we will have to deal with. And it's better to deal with it sooner rather than later.
Now, many of your predecessors were economists. You were trained as a lawyer. So they spoke in what I call Fed speak, which is to say incomprehensible kind of economic language, which was done intentionally, I think, sometimes they would say. So you tend to speak in English. Has that been a plus, you'd say, when you're dealing with members of Congress, they can understand what you're saying?
I like to think so. You know, I've made it a real priority to engage a lot with Congress. In our system of government, unlike the parliamentary system, our accountability is to the legislature. It's to Senate and the House, and particularly the two oversight committees, Senate Banking and House Financial Services. And I think it's very important that we respect that and explain what we're doing and listen to their concerns and share with them how we're thinking about things. And I think they appreciate that. But that is, you know, we have this precious independence. We can't be removed from office. We serve these long terms. The other side of that has to be accountability. And the way for us to get accountability is to be as transparent as possible and try to reach, you know, the people of the United States through their elected representatives. So this is a very high priority, and we're going to keep doing it.
So when you testify in front of Congress, how much time does it take to prepare for that? Is that a 1 hour preparation session, or is it a 1 day session, or a 1 week session?
You know, these are supposed to be monetary policy hearings under the Humphrey-Hawkins Act, and they're actually on anything that's any political issue. So it's quite extensive. You have to prepare for everything that the Fed is involved in and many things that the Fed is not involved in. So it's a lot of preparation.
So when you get questions from some members, you have to bite your tongue and say, why are you asking a question like that, or you never have that problem?
That never happens.
Never happens. Okay. All right. Well, good. So today, as you look at the country's economy, what is the biggest worry you have about inflation? Is it just that the fiscal policy is not completely under control? We have exogenous events outside. What is your biggest worry about inflation today?
Well, it's kind of what I was saying earlier, which is we're just at the beginning of this process, right? Goods inflation. So we need that process to continue. Goods, the whole thing began, the whole inflation began with people not being able to buy services, instead buying goods, and then global supply chains collapsing. And so you couldn't get goods, and prices of goods went up, and that's where it started. But that is now starting to get better as supply chains are improving and as people are rotating their purchases back to services. You move on, though, we're not seeing it yet in housing services, which is either rent or the ownership, the imputed costs of house ownership. But we expect to see that. So we need that to happen. That's another big part of the economy. It's got to come. It should come in the second half of this year. Then the biggest piece of it, and what I worry about the most, is when are we going to see disinflation or declining inflation in core services ex housing? So that's what I worry about. The last thing I worry about is just another exogenous event. It's a risky world out there, with the war in Ukraine and the reopening of China, and those are things that can affect our economy and the path of inflation.
Right. So the balloon was not your worry, though. You don't care about the balloon.
It's not within our ambit.
Okay. So today, the Federal Reserve gets data from all over the country, and are you convinced that you get the best data, you have the best data collection methods, or do you think it's not as modern as what Wall Street gets?
So most of the data that we get are just the same. We don't collect the data on unemployment or inflation or most things. So most of that's just government data, and a lot of that's, for example, very high quality. The labor market data is very high quality. What we get, which I think is better and different from what everybody else gets, is what I mentioned earlier, and that is the reserve banks putting together the beige book, putting together the beige book, and also coming in and sharing the anecdotes and what they're hearing, what's happening with each district is different. You have agricultural districts and energy districts, and so that I think our anecdotal, but also just the haul of information we get through that network is I don't think anybody else has that.
So do you consult regularly with some of your predecessors? I mean, obviously one is Secretary of the Treasury now, but Ben Bernanke, for example, or?
I do. I talk to former Chairman Bernanke. I talk to, Secretary Yellen. I still talk to Alan Greenspan now and again.
And when you're dealing with your colleagues on the Fed board, and you disagree with them, do you say, look, I'm the chairman of the Fed, I am the person who has to make the final decision, and this is what we should do, or you don't quite do it that way?
It's a process of reaching agreement, and I hear what people have to say, and I tell them what I think, and then I'm the one who has to bring a proposal in front of the full committee, not just the board, but in front of the full committee on monetary policy. And it works. We have to reach an agreement, and we get to a place. I think you can tell today we are blessed with a diversity of perspectives on the FOMC with 19 people. Of course we are. But you have one thing that unites all of us, and that is a very strong commitment to getting inflation down.
So in some parts of Washington, people say, if you give me this, I'll give you that. I'll trade this for that. You never do that at the Fed when you're coming up with a decision. I'll do what you want if you do what I want. That doesn't happen ever?
Not really, no.
Oh,
no.
Okay.
Like you mean a better office or something like that?
Well, just, I'll say what you want me to say if you say what I want you to say or something. That never happens, right?
No, it doesn't happen. I mean,
and when you want to talk to members of the board, of the Federal Reserve Board, do you go to their office or do they come to your office?
I like to do both.
Oh.
I mean, I really don't like to sit in my office all day and have people come to see me. I like to go barge in on people, and I think it's much better to get up and walk around and see people.
The Fed has been pretty good at avoiding leaks of its decisions. How do you do that? Because most people in Washington are not so good at that. How do you avoid leaks?
We do have, we've got very strict rules around confidentiality, particularly around the written materials that we have. We publish these things internally for the FOMC meeting, the memos and the Teal book and all that. But the other thing to remember, though, is, we're not trying to hide our decisions from the public. We actually, in modern monetary policy, we want the public to understand how we think, how we're thinking, and if markets really understand how you're thinking and a new piece of data comes in, the markets will go, well, they're going to do this, and it sort of happens organically. And that happened all last year. As we were talking about raising rates, the market priced in rate increases long before we actually enacted them. So we want to be transparent. We're not looking to surprise markets with these decisions.
But from the time that you make your decision on the FOMC, whatever time it is at the end of the day, and your press conference is at 2 o'clock or something like that?
2:30.
2:30.
Yeah.
So your decision is made by 2 o'clock or whenever it is, or something like that. So you got a half hour, but you have to avoid leaks during that half hour because that's very market-sensitive information. How do you make sure nobody is calling their spouse and saying, guess what we're going to do?
Well, people take this very seriously. None of that happens. You're taking your professional life in your hands if you do something like that. I think people have a sense of self-preservation. So people are very careful about this information. There is a period of a couple of hours after the meeting and until we announce the decision, but we announced the decision at 2. The press conference is at 2:30. So I think it's a fairly small group of senior staff and policymakers that kind of know what happened and what we're going to say. And I just think everybody understands that you've just got to be really careful with that.
To go back to jobs discussion, if next month you had another 519,000 jobs created, net jobs, would that be good or bad from your point of view? Have we a lot of people working, but maybe producing more inflation?
So we don't have the luxury of thinking about good or bad. It just is what it is. So, but I would say again, most analysts, most economists would say that to get inflation down from high levels that we've had, if you look at history, there is some softening in labor market conditions that goes along with that, and that is still, very possible and indeed likely here. Some softening in labor market conditions. However, this cycle is different from other cycles because of where it came from, and it's just confounded all sorts of attempts to predict what it would do. So it is good that we have seen very strong labor market, but at the same time we're seeing wages moderating. Wage increases are still very high, but wage increases have come down to a level that is closer to what would be sustainable, still well above what would be sustainable with 2% inflation. And same thing with inflation. Inflation is starting to come down and the labor market hasn't softened. We do expect that it will soften, but it will do what it will do. Our job is to get inflation down to 2% and preserve maximum employment.
So when the FOMC meets, as it does regularly, eight times a year?
Yes.
Eight times. You pretty much know how the decision is going to come out before you actually get together because you've been talking to each other? Or does the meeting of the FOMC change minds in ways that you might not have expected before the meeting started?
It depends on the meeting. I talk to each of the 18 other participants at least once, and we go through everything. What's your analysis of the economy? How are you thinking about monetary policy? How are you thinking about the path forward and all of that? So in some meetings, I will say some of the time, you get into a discussion at the meeting which suggests that maybe you should communicate differently, and then we'll think about that, and we might actually take a break in the middle of the meeting and then go off with a smaller group and think about that and come back and make changes. Sometimes, though, everything plays out as expected.
And when you're having these FOMC meetings, I assume somebody sweeps the room to make sure there's no bugs and anything?
Yes, all that.
So no leaks?
No.
Okay. And today, as you look forward, as we are going forward for the next remainder of this year, your basic view would be you'd be happy if the inflation rate were to get down by the end of the year to 2% may be unrealistic, but your core inflation now or overall inflation you think is about 4.5%, something like that, or what would you say it is?
It's in that range. There are different measures.
Okay.
Yes, we expect significant progress on inflation this year, and again, it's our job to produce it. And I want to say again, we throw these numbers around, but the reality is we're going to react to the data. So if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than is priced in.
So if I wanted to go get a mortgage on a house I was going to buy, for example, you would say I'm not going to be any better off waiting till next year than now because rates aren't going to come down that much at the beginning of next year, so I might as well get the house now, mortgage.
So surprisingly enough, I get a lot of requests for advice on those kind of things.
And you don't give any?
And but I really can't.
Okay.
I really can't respond.
So, okay, so on the whole, to summarize where you are, you're basically saying that the jobs data that came out was a little bit surprising, but in the end, you've taken it into account and you're pretty comfortable with the guidance you gave last time, and you're not prepared to give anything that's completely different guidance than you gave last week.
Well, I mean, this is a world in which we've had the labor market report, and I think that does. I think it underscores the message that I was sending press conference and in the meeting that we have a significant road ahead to get inflation down to 2%. And I think there's been an expectation that it'll go away quickly and painlessly, and I don't think that's at all guaranteed. That's not the base case. The base case is for me, is that it will take some time, and we'll have to do more rate increases, and then we'll have to look around and see whether we've done enough.
Okay. And 2% is the rate we had for the last 25 years before inflation came along. But prior to that, for most of U.S. history, we were higher than 2%. Is it that 2% is, we're now so used to 2% after 25 years of it that you think that's the appropriate level?
So we went through this long period where inflation was really anchored around 2%. And we think that, and economists think that that's because people start to expect 2% inflation. And inflation, it's in a way, if everyone expects that prices are going to go up, prices and wages are going to go up 2% per year, then plus productivity in the case of wages, then it will. That's what will happen. Having price stability, real price stability for an extended period of time is just enormously beneficial to the public, because you can then, on the back of that, you can build a very strong labor market, as we had. We had a labor market with really 3.5% unemployment in 2018 and 19. And we had inflation running, just barely getting to 2%. Wages moving up the most for people at the lower end of the spectrum. And so this was we all want to get back to that place, but the bedrock of the whole thing is to get inflation under control.
The unemployment rate hasn't come down as much as people are going up as much as people thought. In part, some people say because we don't have as many immigrants coming into the country, legal immigrants coming in, taking some of the jobs they otherwise would take. Do you think immigration is an issue in terms of giving us more labor workers, or do you think that's not a factor?
So just as a matter of arithmetic, it was a factor because there was very little migration across borders during the pandemic. And that was part of what was happening, particularly in certain sectors like the agricultural sector and food service and things like that, where there just weren't the people. However, just very recently here, the immigration data have turned up again. And I think that may be part of why people are feeling somewhat less pressure in the labor market to find workers. This is an issue not for the Fed, though. Immigration is obviously a political issue. We do not seek to be a player on this. But it's just a fact, though, that right now the United States has fewer available workers than it has jobs plus job openings.
And when you increase interest rates, the traditional effect is to increase the value of the dollar versus other currencies. Do you have any concern about the value of the dollar going up too much, or that's not something you comment on?
So the responsibility for the exchange rate really rests with the Treasury Department and the administration, not with us. Of course, that's another financial variable that goes into every economic model, but we don't look at it as something that we're working on.
All right. Well, I think I haven't been able to get you to say anything you didn't want to say. I would say, Jay, I've known you a long time. I think you've done a great job in a difficult situation. I appreciate your service to the country at $180,000 a year, or whatever the salary is, something like that. So thanks very much for being here, and thank you for your service.
Thank you, David. Great to see you. Thank you.
Yeah, that was a really good interview. That was actually super good. I'm really happy that I covered this. Thank you, Bear, for letting me know. For anybody that wants to know about my other channels, I'm putting links on the right-hand side. I'm putting links to all 5 of my channels. If you guys want to join all 5 of my channels, please feel free to join all 5 of my channels.
Methane is over
I'll definitely
80 times
appreciate
more
that.
potent than CO2 for the first 20 years after its release. But the amount of emissions released from any given reservoir varies widely. Some reservoirs absorb more CO2 than they emit, while certain climates and conditions can cause others to emit concerning levels of methane. So far, research shows that hotter parts of the world, like India and Africa, tend to have more polluting plants, which is worrisome since both areas are expected to drive hydropower growth this decade.
Let's review. Give me 1 second.
Thankfully,
Let me just get rid of
OCO
this
says that
screen.
China's reservoirs are not high emitters.
All right.
While growth is
I
slowing in the
absolutely
country, it
love
still
this
plans to build
interview.
more
I
hydro
was
capacity by
expecting
2030
a
than
really,
any
really
other
bad
nation.
interview, but Jerome Powell
OCO
said a
also
couple
says
of
that
very
reservoirs in the
interesting
United
things
States are not
that I
of
would like to
particular
go
concern.
over.
But what's really needed is a more
let's take
robust
it from
emissions
there.
measuring program.
And then you could have all sorts of incentives to reduce
All right.
it, or
In the last
regulations
FOMC
to
meeting,
make sure
Jerome
that you're
Powell
not emitting too much.
started shifting kind of. Jerome
Another
Powell
major
kind
problem
of
for
started saying,
hydropower is
hey,
climate-driven
this
drought.
is the first
Shallow
day
reservoirs
that
produce
he was
less power,
positive in
because
terms
the less
of
water,
inflation
the
might
less
just
force
start
with
being
which
under
that water
control.
can spin a turbine.
The last
He
23
says
years
that we're
we've experienced
very
the
early
driest
stages
22-year
of
period on record.
disinflation. He has
As
not said that
reservoirs
before.
like Lake Powell,
This
which
is the
feeds the
first
Glen
time that
Canyon
Jerome
Dam,
Powell is
and
literally
Lake
saying
Mead, which
we are
feeds
at
the
the
Hoover
beginning
Dam, produce
of
less
inflation going
electricity.
down, which is
Fossil
called
fuels are picking
disinflation.
up the slack.
I really, really love
One
that.
study found that from
He
2001
talked about
to
getting
2015,
information when it
an
comes
additional
to
100 million
his
tons of carbon
Federal
dioxide were
Open Market
released
Committees.
across
He says
11
sometimes
states
he
in the
gets
West
last-minute
due to a
information,
drought-induced
but
shift away from
he shares
hydropower.
that, and sometimes he gets
During a
information during the
particularly rough
meetings.
patch for
He
California
went over the
between
governors.
2012
He
and
says that there's
2016,
7 permanent
another study
governors.
estimated that
There's
lost
12
hydropower
reserve
generation
banks, and
cost
every
the
single
state
bank has a
$2.45 billion.
president. That's 90 total
For
board
the first
members.
time in history, a water
There's
shortage has
12
been
board
declared at Lake
members that
Mead,
vote every single
triggering water
time, and they
allocation cuts
always
in Arizona,
rotate.
Nevada, and
However,
Mexico.
New York Bank
Hoover's
always
operational
votes. Every
staff said they don't
every
expect
single
additional
time
cuts
there's
to
an
happen this
FOMC
year,
meeting, New
but
York
they
always
could in
gets one vote.
2023. The water level, currently at
Oh, you guys
1,000...
can still hear that. I'm so sorry. Is this better? Is this better? Is this better? Is this better now? Hold on, let me make sure. Yes? Okay, let me go over. Let me rewind, guys. Stick with me, guys. I know you guys have attention spans of a fucking slug. Stick with me. Give me a couple of minutes. Let me give you guys a recap, okay? Look. This is the first time that Jerome Powell started mentioning that this is the early stages of disinflation. He's saying, hey, we're at the beginning of this, and if everything goes as planned, this is the beginning of inflation going down. It seems like we got a lot of positive news, a lot of positive pieces of news showing that inflation is in fact going down between the CPI, which is the consumer price index, and the PPI, which is the producer price index. It seems like inflation is in fact going down. The inflation that's going down is 3 parts, okay? There's 3 parts to inflation. The first part is goods and services. That inflation has been going down. The second part to inflation is real estate. He said it very subtly, but if you heard what he says the real estate right now is like teeter-totter, but we're expecting it to go down in the next half of the year. What does that mean? It means 2 things. It means, number 1, real estate if you own, and real estate if you rent. Real estate if you own, he's expecting new leases to come out, because there's new leases that are coming out this year, right? The leases from last year. And when new leases come out, the rent should be going down. That's what he's trying to say. As a renter, inflation for real estate is going down. As a buyer, he's trying to say that the real estate market is going to go down as well. He's trying to say that the real estate market is going to go down, so now shelter expenses for real estate and prices of real estate is actually going to go down. If you want to buy a house, I've been saying this for quite a while, 6 to 36 months from now is probably going to be the best possible time that you can buy a house. So please keep your eyes open and your ears peeled. I do have a real estate channel where I go over my own personal properties. I don't just go over some freaking statistics. I show you my own motherfucking properties. If you guys want to learn something about real estate, please join the real estate channel where I show you my actual properties and I show you what I go through as a daily basis as a real estate, as a landlord. Section 8. And then the third part of inflation is services not related to real estate. Not related to real estate. And that's the problem. Why? There's so low unemployment that employers are fighting to find people to work. And because employers are fighting to find employees and there's nearly 2 jobs for every person looking, that means that employers need to pay employees more money. When employers pay employees more money, employers raise rates. When employers raise rates and they're still paying employees more money, there's something called a wage spiral effect. The wage spiral effect is quite simple. The wage spiral means you as an employee pay your employee more money. You raise your prices more than the money you just paid your employee. Because you keep raising your prices, the employee is getting a raise, but the employee needs more money. Why? because inflation keeps going up. And this is called a wage spiral, where you're not catching up. You're raising wages, but you're also raising prices. Because you're raising prices, the employees are going to ask for more wage hikes, and so on and so forth. This is something that is not going down. So there's 3 parts to inflation. One part is not going down, one part is going down, and the second part seems like it will be going down, okay? Now, he mentioned a couple of other things. He says that we're trying to get to 2%. This is a very interesting thing. He says that we're not going to get to it this year. We're probably going to get to it next year. We all knew that. However, he talked about his balance sheets. The balance sheet of the Federal Reserve now is $8.4 trillion. I think the balance sheet was like $10 trillion before. Don't quote me. I don't remember off the top of my head. But he says he's not selling the balance sheet. He is just passively letting it go. So how does this work? Whenever the Fed puts anything on the balance sheet, they put money in the economy. They put money in the economy. That's how the money printer, when the Fed puts money in the economy, that's how they do it. They buy up their balance sheets. So you have a few choices. You can sell whatever you bought in the open market, or you could just choose not to renew whatever you're buying. And that's what they're doing here. It's called passively letting the balance sheet deplete. That's it. They're just not renewing any contracts. They're not buying anything new, which is really, really good. And he says that it's going to take a couple of years to passively bring down the balance sheet, which is good. He's trying not to crash the market. He was talking about having weekly lunch meetings with Secretary Yellen, the Treasury Secretary. He went over, you guys don't care about that. He said his salary is like $190,000. He says he meets with world banks 6 times a year in Europe. He says that the total debt of the United States is unsustainable. This is an unsustainable fiscal policy. If you guys want to understand how this works, for every dollar, now clear your ears, guys, clear your ears. I'm not going to tell you how to invest $100 to buy a Lamborghini, but I will tell you real knowledge. For every $1 that we bring in, to the United States, we spend $1.20. So we make $1, we spend $1.20. Obviously, this is not sustainable. The debt ceiling was invented in World War II. The reason why the debt ceiling was invented, and currently our debt ceiling is $31.4 trillion, but the United States owes $31.6 trillion. The reason why the debt ceiling was invented was, if you need money, you don't need to go to Congress to ask. There's just money available. Since World War II till now, they have raised the debt ceiling around 100 times. So this happens all the time. We cannot fix the motherfucking government. We cannot fix motherfucking America if we are spending more money than we make. Listen to what I just said. The United States government spends more money than we make. It's freaking crazy, guys. It's freaking crazy. Okay, let's see. Let me answer some questions now. Where do I start? I don't know where to start. All right, I'm just going to start picking random things, and I'll keep going down. Better, yes, much better, no worries. Look, dandy, perfection, all good. I am a super slug, you got it. Slugs. What a slug. China, and let's start with this. As a sailor, I can say never wish for stranger winds. China is opening more and more economy gears will pick up bullish. Yeah, there's no more supply chain issues, but the supply chain issues is just 25% of the economy or 25% of inflation. The other 75% is broken down into services and real estate. So services is going to be the last thing that's going to go down. We have an issue with services. That's good news about housing. Yeah, absolutely. It's a good news about housing. You guys got to basically be prepared to buy into housing. You know what I mean? Be ready for that. I don't have an air peeler. So they think the interest rate could go back down to the range within the next year. That's what they're thinking. Basically, what's happening is right now inflation's going down, and if everything is going to be on the same trajectory, inflation's going to start going down heavier and heavier and heavier because everything that they're doing now takes time. There's a lag effect. The lag is not a month. The lag can be like 6 months. It could be a year. It could be 3 months. Nobody knows what the exact lag is. After that lag is done, it starts taking into effect. So they don't want to they don't want to keep raising interest rates or reduce their balance sheets enough that it's going to crash the market. So yeah, they're trying to say inflation is going to go to 2% next year. I don't think inflation is going to go to 2% next year. I think inflation is going to be somewhere around 5%. They're going to, sit back, relax, and think what's going on, and then they're going to be able to lower inflation more, but not to 2%. But things are still high. Like certain things are super expensive, like eggs. Like eggs are mad expensive still. What else? Why do I keep hearing no music? Does anybody have any other questions? Before I go, please, I do have 5 channels. Sign up to all of my channels. I do have a Discord. Sign up to the Discord. It's 100% free. And unlike a lot of YouTubers, I'm actually going to hold your hand if you guys have any questions. Most people don't answer shit in their Discord, and they charge for it. We have a free Discord. We answer questions. We are active. I never understand it. When something is paid for, people line up to pay for it. When something is free, nobody wants to use it. It's the illest thing ever. Does anybody have any questions before we go any further? If you guys don't have any questions, I'm going to end the live right now and I'm going to start making YouTube videos. This is false. Don't listen to this guy. The first investment that everybody should be doing is real estate. The very first investment you should do is buy yourself real estate for your house. Your personal house. And if you could do it, you should do it as a house hack, which means you live in one apartment and the second apartment you're renting. Let me explain to you why this guy is an idiot. Okay, HG, let me explain to you why you're an idiot. Right now, the entire crypto market completely tanked. The crypto market, no matter what you're holding, went down between 60 to 90%, depending on what crypto you're holding. You would have been absolutely fucking bankrupt. However, real estate was appreciating or on neutral the entire time that the crypto market was going down. So why would you invest in crypto instead of real estate? Let me explain something to you. You should only do risky investments, and despite what all the crypto bros are going to think of, cryptocurrency is super risky. You should invest in cryptocurrency, and I'm invested heavily in cryptocurrency. Only after you buy yourself real estate. Now, if you can't afford real estate and you want to try to get into real estate, then work on it. You know what I mean? Then if you want, you can invest. But this is the stupidest statement I've ever seen in my life. Buy crypto, not real estate. Don't listen to this guy. This guy will never be wealthy. I guarantee you, this guy is not rich. Bro, when you have real estate, by the way, most people don't understand this. You pay so little taxes in real estate. You can borrow against your real estate. You don't pay taxes on money borrowed because it's not income. It's a borrow, which means you have a promissory note to pay back the bank or the lender or the hard money lender, which means you're not taxed on that. Besides for that, the money that you're collecting from real estate, approximately, there's a formula. There's something called depreciation. 25% of the money that you're collecting in rental is not going to be taxable due to depreciation. Not to mention you write off a million different things when it comes to real estate. And you can gift your real estate to your family in perpetuity and pay $0 taxes. So don't listen to this guy. If you can buy real estate first. Then you can invest in stocks and cryptocurrency. Cryptocurrency is great when everything's going up. But what happened in the last year and a half? You're sucking dick because cryptocurrency was going down. So if you don't want to suck dick on a corner, buy yourself some real estate. Why is the Euro USD going? I don't know, man. Oh, nice. 120. Nice. Honestly, I don't know much about Aptos. I'm not even sure if I'm going to get this right. Isn't Aptos a fork of Solana? if I'm not mistaken. I did want to make a video on that. I wanted to do some research about that, but yeah. Should I take out equity on a home now with prices high, but rates high too? So if I was you, and this is not financial advice, what I would do is, if you open up a HELOC, a home equity line of credit, so the rates that we have right now are going to be the rates that we're going to have for a while. The rates are going to be within 1% of where they are now for probably the next 5 to 7 years, if I had to guess. I don't prefer taking out equity out of my property. I personally prefer to take out lines of credit. So I like to borrow home equity lines of credit against my property. Because if I don't need it, I don't have to pay interest on it. You only pay interest if you need it. Now, the interest is variable, which means it goes up and down with the market. However, you're only paying interest on the money that you're using, okay? You don't have to pay interest if you're not using the money. So that's why I prefer home equity lines of credit as opposed to refinancing. Refis. No refis. So that's what I would do. However, I don't know your financial situation, but you could get personal, unsecured lines of credit. I was telling this to my guys for the longest time. Guys, on my channels, I talk about real shit that I do all the fucking time, and nobody listens. Nobody fucking listens. Some of my guys listen and they thank me for this. You could take out a personal, unsecured line of credit where it's not against your real estate, and it's at a fabulous rate. For example, I took out a $100,000 loan from the bank, unsecured, which means they can't come after any of my assets, and my rate is 2.5%. They're offering it right now. I know banks that are offering it right now, 3.5%. Interest only, 2 years, and then you have another 5 years to pay back. So on $100,000, you're paying back like 2 years, you're not paying back anything, and then for the next 5 years, you're paying back like $2,000 a month, something like that. It's freaking fantastic. And you use that money. You only take out equity from your property if you need to buy other assets. You don't take equity out of your properties if you don't need it for something. So take out equity to buy another piece of property. So if you borrow against your property and then you buy another piece of property, that's how you build a portfolio of real estate. Turned in Leah, watch again. Thanks for your insight. My pleasure. Crypto has higher gains. No, crypto does not have higher gains. It all depends on when you're buying and when you're selling. Real estate has steady gains. Steady gains, which means when the market goes down like it just did, remember, nobody thought the market could go down. What happened to real estate? You're sucking fucking dick. You are sucking fucking cock if you had real estate right now, if you had crypto. However, if you had real estate, you were okay this whole time. I'm for crypto. You guys know me. I have a large crypto portfolio. I am for stocks. I have a large stock portfolio. However, the very first investment that you should be buying, in my opinion, and this is not advice, is real estate. Real estate is for sure money. Do you know what that means? For sure money, which means for sure you will be getting paid. You know, if you have real estate, in 7 years, you're doubling your money. You know this. It's a fact. On average, you will be making the money. And you can pass it along to your children. That's the point. Crypto is a great investment, but it is super risky. And anybody that tells you differently is lying to you. Crypto is super risky. It's a great investment to make a lot of gains. But what's happening for the last year and a half? Nobody's making money in crypto. He wants you to buy crypto to bail him out. Yeah. Shorts when going down. Short when going down. When you short something, there is no ceiling. You can get liquidated forever. You can lose everything when shorting. Just be careful. I'm not saying people don't make money, but those are exceptions to the rule. You can't time the market. Who knew what Jerome Powell said today or his last meeting, what that changes. Who knows what war we're going into? Who knows if the government is going to put in rules? Who knows if a CBDC is going to absolutely obliterate crypto? Nobody knows. Nobody knows these things. Crypto is great, but real estate is number one. Real estate is good debt. Cocaine and strippers, that's a very good investment. I own my house and vehicles. If you own your house and your vehicles and you don't have a mortgage on your house, you are severely, severely killing yourself. Do you know anything on ellipsis? Why would you not have a mortgage on your house when the mortgage was at 2.5%, 3%? It's free money. But congratulations, if you own your house and vehicle, that means that you are not broke. I don't know anything about ellipsis. Adam, that's why I appreciate you, so thank you for being real. Absolutely, I am always real, and I suffer for it, bro. It's crazy. It's crazy. Nobody appreciates, not nobody, very few people appreciate real. Most people appreciate this rah-rah, sis, boom-bah bullshit, bro. It's fucking crazy. Crypto is easier to obtain than real estate, and you can transport it. I am buying crypto because I want to get into real estate. That's a common misconception. I don't understand where people say this. Crypto is easier to obtain than real estate. You have dozens of opportunities to buy real estate through crowdfunding, through Lofty AI, where you can literally buy it with crypto. There's many different ways to buy cryptocurrency. Is it as easily attainable as crypto? No. But is it difficult to obtain? No. People assume that you need a lot of money to start crypto. That's also false. For example, I have investors, they give me money, I buy real estate with their money and my own money. So you can have many different and I'm not saying this, I don't want nobody's money. You can have very many different variations. What I'm saying is, easy come, easy go. Crypto will fall and rise very fast. Real estate is stable. That's all I'm saying. Can you link a video or what it called for real estate? Yeah, I could. You want my real estate channel? I could give you my real estate channel. 1 second, I'll link it. 1 second, let me pull it up. Let me link my real estate channel. 1 second. This is my last video. Feel free to watch it, but there's a lot of other videos up there. I'm just going to link my last video to make my life easier. I got your point with the gains and advantages of real estate. Yes, sir. Real estate is safe. I am on your side there. Yeah. So can I explain my theory and my thesis of how it works? So there's age categories, right? Until 20 years old, you don't know shit. 20 to 30, you should be as aggressive as possible to grow your nest egg. So maybe 20 to 30, take as much risk as you need to make money. By 30 to 40, you should still be taking risks, but you should be taking calculating risks to get to a certain point by 40 years old. At 40 years old, you should be taking very moderate risk and you should not be super aggressive. At 50 years old, you should take no risk whatsoever. Somebody just made a post on Twitter. And it was a big channel. And he goes like, if I offered you 20x on your crypto portfolio, would you leave or not? I said yes. If you paid me 20 times what I have in crypto now, I would leave. Why? It's not that I would have generational wealth. It's that I would have multiple 7 figures. And I know how to invest multiple 7 figures to get residual income. And I wouldn't have to worry again. I would never have to work in my life. My children will never have to work in their life. Why? Why would I risk anything more? So what I'm saying is I'm in crypto, I believe in crypto. But at a certain point, if I make the amount of money that I want to make, I'm not risking shit. I'm enjoying my life because at the end of the day, this is for myself and this is for my family. So if I can make enough money that I could pay out my family and they don't need to work, I'm fucking done. I'll still invest a small portion into crypto, but for the most part, I'm going to live a nice life. I'm going to buy treasury bonds. I'm going to make my 4 to 10% on very safe investments. And I'm chilling. I'm living the freaking life. No point to risk it. But I get it. Real estate, you'll mostly get your money back when you sell the property. What's happening with Algo and Affinity? When Bridge? Algo Infinity Bridge should come in the next 2 to 3 months, if I'm not mistaken. I actually on my series, I have a series on my second channel, building a $1 million crypto portfolio. If you guys want to see this, I just put out a video where I document every single day I buy myself crypto, and I buy $50 of crypto every single day on my path to $1 million. I'm trying to build a $1 million crypto portfolio from scratch. So I have my main crypto portfolio, and then I have a second one that I just started. I'm buying $50 every single day, and I'm documenting it, showing you my Excel sheets, my gains, my losses, so that anybody can do the same thing. I'm going to link the video right now, one moment. And Affinity is going to be one of my buys this week, because I think Affinity is definitely one of the best possible investments. Risky, high reward that you can possibly make. I'm going to link the video right now. One second. If you guys want to start a crypto portfolio, not financial advice, I just put a link down below. I put out videos daily, $50 buys every single day of different cryptocurrencies. We're building a $1 million crypto portfolio. Please join. The Discord is down below. Thank you so much, Albert. Yo, D-Rock, what's up, baby? Thanks, Adam. I much appreciate your work input here. Yo, I appreciate you. Thank you very, very much. Some people I remember, they've been with me for quite a while. I shorted H-bar, was caught off guard. Lesson learned. Just wishing I can get back. Thank you so much. I appreciate you being honest. That's exactly what I'm talking about. I'm not going to troll you. This is what I'm talking about. You can always make money, but at the end of the day, when you do risky plays, it catches up to you. It's like the casino. Yeah, you could put your money on red 3 times in a row, but on the 4th time, the 5th time, the 6th time, you're going to lose. And this is what happens in crypto. When it comes to real estate, it's super forgiving. Time forgives you. So if you do something wrong in real estate, you can recover. Crypto is hard to recover. And I'm talking from experience, bro. I lost a lot of money this last year cycle, like everybody else. I'm talking about multiple 6 figures. You know what I mean? Like, it happens. I was caught off guard too. We all were. So shout out to you. I know I won't say her name, but her name starts with an N and rhymes with fancy. Okay. Thank you for the explanation. My pleasure. Guys, and I apologize. I'm not trying to be mean to anybody. I'm just trying to be honest. And I'm trying to... Listen, I lose so many subs. I lose so many likes. I lose so many shares because I'm honest. And I'm always going to give you my honest opinion. I give you my honest, real-world experience opinion. This is shit that I do daily. Sometimes I'm right. Sometimes I'm wrong. Most of these YouTubers, they will sell their freaking asshole for likes and clicks. And it's fucking disgusting. These YouTubers are straight up prostitutes, selling themselves for likes and clicks. That's it. Have no real world fucking experience and talking about finance. It's absolutely freaking absurd. And those are the people that get the rah-rah, sis boom bah most views, period. It's freaking astronomically crazy to me. Which one? Affinity? Yeah, Affinity Token Affinity Token is my #1 token play for small cap. I have a video. It's going to be coming out probably this week where it's going to be one of my $50 plays. I own a lot of Affinity, by the way. At one point, I bought 5 figures worth of Affinity, and I've been with them for quite a while. This is not a sponsored video. I did work with them in the past, but I believe in the project, and they're doing something remarkable. They're not getting enough credit. Affinity is going to be the first project that is using state proofs to bridge Algorand to Binance. The first one. And they're not getting enough love. They're not getting enough support from people and from Algorand themselves and Algorand community. Like, they're not getting no love, and they're making such a monumental project. It is huge if it works correctly. And I'm willing to buy more of Affinity because I do think that it is a fantastic play. So for me, Affinity BSC is the #1 undervalued project when it comes to a micro cap crypto token. Not advice. This is for me personally, I'm telling you. For me, I know the team. I know what they're working on. And they are a no bullshit project from everything that I saw up to now. And if I see something that I don't like, I will call them out. It happened to me before. If I see something I don't like, I call people out. You know me already. Affinity is a very legit project for me up till now, and I'm going to invest more money into Affinity. My mother. What's up, Gabe? Good to see you. I appreciate you. Guys, check out Gabe's channel. It's really fast growing. He has nearly 5,000 subscribers. He just started this year, which is freaking amazing, guys. A YouTube channel that can grow 1,000 subscribers in 1 year is huge. He grew nearly 5,000 in like half a year. He talks really high-level stuff. He talks options trading and things like that. Really high level. A lot of things I don't understand. I'm honest about that. So if you guys want some advanced strategies, talk to Gabe. Follow him. His channel is really good. I'm telling you guys, I'm not fucking around. His channel is really good. He talks really complicated, high-level stuff. And he's an analyst by trade. So you guys will enjoy his channel. Good luck in hitting 1 million. Thank you so much. I appreciate it. I appreciate it. It's not going to be my first million. I got a couple of them. A few, not a couple. And but I want to build a brand new crypto portfolio showing you $1 million. The problem is all of these big crypto channels, and some of them made a lot of money. They got into crypto early, and yo, shout out to them. But you know what I mean? You got people like Carl to the Moon buying Bugattis and buying Jacob watches and shit like that. That's unattainable. The guy is worth, I don't know how much he's worth. Millions, hundreds of millions, a billion. Doesn't fucking matter. It's unattainable. You can't follow in his footsteps. You can't follow in those tracks. So you can't relate to that. You know what I mean? Like, I just put in $1 million. Shut up. I want to build a $50 a day crypto portfolio because everybody has $50 to invest. And I'm tracking it on an Excel sheet. You know what I mean? That's it. How long we've been hanging out? Feels like a lifetime. Yo, that's my boy. I actually met Bear and my boy Invictus. They've been with me for quite a while, for at least over a year. We actually met up before. We talk all the time. Shout out to him, straight up. Thanks, Adam. Awesome content as always. Yo, shout out to my man Maytag. I spoke to him earlier. He's going through some shit. My prayers is out to him. My support is out to him. I got you. I got you. I got you. Feel better, my brother. I appreciate you. He's also been with me for quite a while. Guys, by the way, I'm also the only fucking YouTuber that had Patreon, canceled his Patreon, did everything for free. Maybe I'll have a Patreon in the future. You know what I mean? So I'm trying. I'm trying to be with the people. Can we invest with you so we can make $1 million as well? Nah, I don't want to take none of your guys' money. Thank you so much. Because I have to be responsible for it, you know, and I don't want to do that. Sometimes I win, sometimes I lose. Bro, 2022 was the worst financial year for me, period. So it is what it is. It could take you years to build something, and then it could just get taken away really, really fast. I got hit like anybody else in this market. However, because I have a financial education and I have financial knowledge, I was able to have plan B, C, D, E, F, G, H, I, J, right? Many, many different plans. And what saved me? Real estate saved me. You straight up, and that's why I keep watching. Thank you so much. I appreciate you. I think now that there is no more Powell anytime soon, the market will go back up to technically biased. It's overbought, so down is my opinion. I still think the market's going to go down and the crypto market as well. However, I am starting to get my thesis shellacked because it's just been a couple of good news. However, with national debt all-time high, with personal debt all-time high, and with 66% of Americans living literally fucking paycheck to paycheck, real estate market is about to tank, and savings accounts are going down, not to mention the amount of people are saving. This is a recipe for disaster. So we'll see what's going to happen. Always keep it real, brother. Always, always. I don't care how much I suffer. Always. What platform to use Affinity? Very good question. I'm going to link a video down below to show you guys how to buy Affinity. Give me 1 second. But the platform that you buy Affinity, you could buy it on PancakeSwap. But the best platform to do is use Affinity Adapt. Affinity Adapt. Affinity Adapt is their own platform. That's why they're such a special project. So Affinity Adapt is not exactly a DEX, like a decentralized exchange, and it's not a swapper. It's somewhere in between. So what Affinity came out with, instead of you connecting your wallet, like your DeFi wallet, that's like a million different numbers, Affinity came out with the ability for you to have a name, and your name is associated with your wallet. And then you have Affinity Adapt, where you can buy, sell, and trade Binance tokens, BEP20 tokens. Well, now they're doing a bridge where you can buy, sell, trade between Binance and Algorand. And in the future, I think they're going to do more. Affinity tries to be the Cash App or the Venmo of cryptocurrency. I'm going to give you a video right now that I'm going to link, and I'm going to make a brand new video. So please make sure you watch my brand new video. It's going to come out this week, where I'm going to break down Affinity. Affinity token utility, the truth about Affinity. One second. It's taking, what is Affinity? Twitter Space, new Affinity token strategic partner. One second. I'm gonna give you the video. 1 second. I don't do it. How to buy Affinity. 1 second. I'm giving you a link right now. I just put a link down below how to buy Affinity, but don't buy Affinity because I'm telling you, that's not what I'm doing. I'm giving you my own personal opinion. I am invested in Affinity. This is not a sponsored video. I was sponsored by them before. I don't get shit if you buy or not. Don't buy because I'm telling you. Do your research. I have more videos coming out. Do your own research. For me, Affinity is a very solid play. I've been rugged by other projects, and I try to do as much due diligence as possible. Affinity is solid. No, that's not. I'm talking about Affinity. A-F-F-I-N-T-I. I can't spell. Maybe I missed some news. Affinity is on BSC. Great group of honorable Yeah, guys, their whole squad is military. Everybody in their team is military, by the way. And for my Palantir heads from stocks, the main guy, Chris, the CEO of Affinity, he actually holds Palantir as well. Please talk in depth about recent BTC dump and your predictions for the next 3 months. I've been saying this for quite a while. I think crypto is going to retreat. I don't know if it's going to reach an all-time low, but I think it's going to retreat from where it is right now. On the next retreat, I'm going to be buying more, and hopefully the crypto market comes back. I think the crypto market and the stock market has one more retreat to go because it's going too strong, too fast, based on what? Nothing. So that's what I think is going to happen. And about the recent BTC dump, I don't know what you're talking about. It went from 16,000 to 24,000. So I don't think that's a dump. I think that's a 50% up. Do you want to be part of? Yeah, that's nice. All right, man. I can't believe we answered all those questions. Does anybody else have any questions? I'll keep talking. I don't mind. I'll go forever. As long as you guys have questions, I'll keep answering. As long as you guys have questions, I will keep answering. Bump, not. Oh, did I read that wrong? I'm so sorry. Bump. I'm so sorry. Yeah. I can't really explain why crypto's going up. I think it has something to do with just the market. People are buying into it, and that's it. It is what it is. The whole crypto market moves in tangent for now. Eventually, they're gonna decorrelate, but it is what it is. I can't really explain to you why. Except for a positive CPI, a positive PPI, which means that our consumer price index, which is consumer inflation, and our PPI, producer price index, which is our wholesalers inflation, is actually going down. And Jerome Powell is speaking, and it seems positive. How much lower on average does real estate go? So I think that the whole real estate market is going to calm down on a national level somewhere between 10 and 15%. This is my prediction of what I think is going to happen. I don't think, but again, it depends on your city, state, jurisdiction, so on and so forth. So some cities and states, real estate can go down 5%, or real estate can even go up. You never know. Some the real estate can go down 50%. Nobody knows. You know what I mean? So it all depends on your location. It all depends on your area. But I think 10 to 15%. You know? That's what I think. Yes, I heard about Dell. They're laying off a lot of people because of the computer demand is down, which I believe is going to have a very negative effect on NVIDIA, more so than AMD and maybe a little bit on AMD. So I would watch out for those. There's probably going to be a lot of great deals to buy a little bit later. I don't invest in precious metals. I don't know much about them. You could invest in gold, silver, platinum, things like that. I don't know about them. I do invest in watches. I got several watches in my watch collection, and these things hold a lot of value. Even now that the market dumped, I'm still getting more money than I paid for these. But yeah, I invest in watches, not precious metal. So if you have an opportunity to buy watches, I would probably buy watches. Basically, if you can buy any stainless steel Rolex, not any, like Datejust, Blueface, any Sky Dweller, any Daytona, any of the Supermans, any of the superheroes, the Hulks, Pepsi, Root Beer, Batman, Batgirl, any of those that you buy, you're going to make money. Any of those for Rolexes. So you'll be good. Don't buy any women's sizes. You know, you want to have 41 millimeter or up, and you're not going to lose money. If you can get them stainless steel, you're going to be good. Those are probably your best bang for your buck. Anything Blueface, if you can get Blueface, they're worth more money. So anything Rolex, Blueface, get that. But you're not going to get it. You can't just walk into a store and get it. So the best way to make money, if you guys want a side hustle, go into a Rolex store. Every fucking Rolex store you can possibly go into. Call every single Rolex store in the country. If you're sitting around jerking off and not doing nothing, this is a way to make money. Call every single Rolex store, go to every single Rolex store you possibly can, and try to put your name on a list. Most of them will say, yeah, we'll do it, but they're not going to put your name on the list. To get your name on the list, they might call you in 3 to 5 years. But when they call you, take whatever they're offering. When you take whatever they're offering, you hold it for 6 months, you hold it for a year, you flip it. You're not supposed to buy and sell watches, but it automatically increases value. I hope you guys understand what I'm saying. And then when you buy a watch on Rolex, they will call you for another watch because you bought one. Now you have a relationship. Now you don't have to wait as long. This is one of the best methods to make money. I never paid aftermarket prices for my watches, and all my watches appreciate. People should not forget to hit the like. Yeah, I would appreciate the like. I would also appreciate the follow. I don't know how, but I got less subscribers now than when I started the live. Mara is my favorite Bitcoin miner. Very easy to trade. What do you think about them? So I'll tell you the honest truth. I don't invest in any Bitcoin miners. I think if you're buying Bitcoin miners, you are short selling yourself. If you take into account the amount of assets that the mining company holds, which is the actual Bitcoin, don't pay attention to the mining rigs. They're not worth anything. Once you use them, they're outdated technology. So if you look at the actual assets that the mining companies hold, and you're going to appreciate this because you are an analyst, you're going to understand how badly you're overpaying. And I think you're going to sell your mining companies. You are overbuying like crazy. For example, if they hold $1 million worth of Bitcoin, for example, or Ethereum, whatever mining they have, you are paying a premium as if they're holding twice as much, maybe more, 50% as much. You are paying a high premium on a mining company, and there's no point to do that. If you want to mine crypto, buy crypto and stake it. For example, if you buy Cardano, if you buy Algorand, if you buy Hedera, Hedera is going to give you 6.5% staking rewards. You don't do nothing. You literally buy it, you put it in a wallet. I'll show you how to do it. I have many videos, and you get 6.5% in that crypto. If you do Algorand, you can get as much as 13% paid in Algorand. If you're doing Cardano, you're getting paid 5% of Cardano. If you're doing Polkadot, I think it's like 12%. Now, the risk is that the price can go up or down. But the risk when you're investing in these mining companies is if the price goes up or down of crypto, the price fluctuates as well. Just like if you're buying MicroStrategy, you're buying MicroStrategy not for the company, you're buying MicroStrategy for the amount of Bitcoin that they're holding, right? At the end of the day. So in my personal opinion, you're shooting yourself in the leg because the mining companies, you're overpaying for no reason. Thank you so much. My favorite watch right now is a titanium Omega. What's your favorite maker? So if I was to buy a watch, the watch has to be one of the holy trinities. So you have Rolex, you have Audemars Piguet, and you have Patek Philippe. I have Rolexes, I have APs, I don't have any Pateks. I don't like Pateks personally, but those hold the most value. And right now you have Richard Milles that just started becoming crazy popular, but they're mad expensive. The easiest watches of the holy trinities to get is the Rolexes because they make the most watches a year in proportion to an Audemars Piguet or a Patek Philippe. If you're serious about investing into a watch, I would not buy myself an Omega, not because it's not a good watch. It's not going to hold as much value, one. And two, to be honest, if you're going to be walking around people that have watches, like you go to a party, you do something formal, and you pull out an Omega, no one's going to like that. No one's going to take it seriously. You have to have a Rolex, a Patek, or an AP. Those are the three. That's it. No one's going to take anything else serious. There's also other variations of other watches that you can get, but those are pretty much the three. There are other watches of certain brands, like one type of the watch that's going to appreciate. Then again, I don't know much about the titanium Omega specifically, but I'm just telling you in general what it is. I wouldn't get myself an Omega. No, they didn't. Really? Shut the fuck up. Del Hedera. Oh, thank you, bro. Thank you so much. I appreciate that. I appreciate that very, very much. Thank you very, very much. Thank you for telling me about that. I didn't know. Thank you so much, Dave. I really appreciate that. I'm going to make a video. Thank you very much. I appreciate that. He didn't crash the market. We're barely red. Very nice insight on watches. Thank you so much. Appreciate that. I appreciate it. Market barely green, but SPY will bleed to 400 at least. I've been wrong a lot. That's okay. You can be wrong many times as long as you have defenses. Eventually, it's going to go up. No, really. Thanks, man. Yeah, my pleasure. If you guys have any other questions, feel free to join the Discord. That's what I'm trying to say. Most of these YouTubers, bro, I don't want to sound like a broken record and complain because I really don't give a fucking fuck, but it drives me fucking insane. Most YouTubers cannot speak finance. They can't talk about general finance, general economics. They could only talk about maybe one little thing. Most YouTubers never made money in real life. Never. They buy watches, they buy houses, they buy cars after YouTube. Your money. So please, join the Discord. Ask any questions you want. I'm not Googling. I'm just talking. This is all verifiable. You can check on Google everything I'm saying. I'm right. They outperform Bitcoin gains every cycle, though. They outperform Bitcoin gains every cycle. Yes, maybe. I don't know about that. However, they also outpace the losses, one. And number two, if you have a problem with the company going under, you will not get your value out. Okay? They're not going to. Kind of what's happening with Celsius, how they have a bunch of rigs and they have a bunch of Bitcoin. Not exactly Celsius situation, but you're overpaying more than the underlying asset. And I want to give you an example. There's a company called Grayscale Investment Trust, GBTC. Grayscale Investment Trust. For the longest time in 2017, Grayscale used to trade at a premium, which means if they have $1,000 worth of Bitcoin, you're paying $1,300. 1,400. The premium was crazy, 30, 40, 50, 60%. And nobody thought this was going to go away. If you fast forward to today, they're selling at a discount, which means if they have $1,000 worth of Bitcoin, you're buying that $1,000 worth of Bitcoin as if you're paying $800, $700. And they don't move with the market. So things can change overnight. You can double check what I'm saying. Check GBTC. GBTC used to trade at a premium, but now it trades at a discount. Be very, very careful. So yes, maybe mining companies can outperform in every cycle. However, there weren't so many mining companies in the last cycle. The mining companies just came out this cycle. Most of them. So be very careful. I don't invest. I trade them. They got oversold. Oh, yeah. For trading, they're fantastic. Great idea. 100%. I loaded Mara hoping for Bitcoin to go up 30K, which is a little above for me. Congratulations. You did good, man. Good for you. I'm glad you made money. For trading, they're good. Gabe, for trading, they're really, really good. Yeah, trade that shit. Luna 19, Adam Cake 38. That's your portfolio? Luna, Adam, Cake, Hex. Why don't you have any Hedera or Algorand in there? And why don't you have a Bitcoin, Cardano, BNB, or Ethereum? I have the Omega No Time to Die bond version was my retirement gift for myself. Yo, congratulations, bro. Very, very nice watch. That's a very, very nice watch. I see you like the Omegas. The Omegas are great. The Omegas don't get enough love as they should because they don't have any rap stars that wear them. You know where Rolex got its value? Before this, the only people that wanted Rolex was gold Rolexes. But then Ari Gold from Entourage wore the Rolex, a stainless steel Rolex. And now all of a sudden Rolex started selling stainless steel Rolexes and they started making a fucking killing. That's where it became famous. This is what happened with Audemars Piguet. Before Jay-Z mentioned it in the song, it didn't go crazy. Also, not like that. And also, the Richard Milles, it became famous because of Post Malone. He mentioned them. So when people mention you in a song, that's how your shit goes off. Nah, Cartier is shit. They don't hold value. It's not shit. It's whatever. It's okay. You need Rolex, Audemars, Patek. That's it. But you're not going to get a Patek in the store. You're probably not going to get an Audemars in the store. You might wait 5 years, 3 years, and you're going to get a Rolex in the store. That's why there's a huge gray market, black market, where you can buy aftermarket. What's up, buddy? Good to see you. Where can I join the Discord? I'll give you a link. One moment. One second. I'm going to give you the link in 1 second. I left you the link down below. What else you guys want to talk about? Guys, if there's any... You're welcome. Thank you so much for joining. I appreciate it. Please be active. Ask any questions you want, bro. I'll be happy to ask. I'll be happy to answer you. Real estate, stocks, crypto, to the best of my abilities. Does anybody have any more questions? I'll be happy to keep speaking, but I need questions. What do you think about the China balloon? I don't care about that. China uses balloons and we use Palantir. That's what I think. What else? Poker game is going to be this Thursday, probably at 8 o'clock. I'll probably announce something tomorrow. The poker game is going to be 100% a free roll. I'm going to pay a prize. The prize is probably going to be paid in Bitcoin. And the prize is probably going to be something small, like $50, $100, something like that. Completely free, paid for by me. Yeah. Take care, brother. I don't know much about Jasmine. A lot of people are asking me about that. I don't know much about it. I need to do my research. I honestly have no idea what that is, but so many people are asking me to make a video on it, and I get the comments all the time. I will reserve my opinion. I don't know anything about it, but yeah. I could only be honest. Yeah, this Thursday at 8 o'clock. It'll be fun. So last time we got like 50 people. I think this time we're going to get more than 50 people. It's a tournament style. I make the blinds really small so we can play for a while. And yeah, I'll pay out the prizes. It'll be fun. Do it, baby. Do it. Are you ready for a nap? Are you ready for a nap? Are you asking me if I'm ready for a nap? No, I'm good. Are you ready for a nap? What else? What nap, bro? I got kids. I gotta work. You guys are taking my time up with this live, which is great. I still gotta make 47 videos today. I put out like 5 videos a day. What nap? Nap is for the weak. I'm like Elon Musk. I don't sleep. Shooting Chinese balloon sales, yeah. What else, guys? We have any more questions? If not, I'll get out of here. Good question. If you had 100K at your late 20s, how would you invest it? If you had 100K in your late 20s, how would you invest it? I did have 100K in my late 20s. I had multiple 100Ks in my late 20s. I bought myself a house. I bought myself my first property at 31 years old. I bought my first house at 31. Right now, I'm going to be 40 years old in about a week from now. So the very first thing I would do is buy a house. If you have 100,000 free and clear, I would buy a house. So let's break down the average house prices. Guys, look, no hands, no Google. Let's talk. The average house price right now in the United States is $450,000. Let's go up to $500,000 because you want to buy yourself a 2-family house. In order to buy a $500,000 house, you need $100,000 to put it down. By the way, I have a full video with a calculator showing you guys all the prices between renting and buying a house on my real estate channel. Everything I'm saying, full breakdown, charts, it's great. So you put down $100,000 for your house, you're left with a mortgage for $400,000. The problem is, if you put down $100,000, you need closing costs. Closing costs are going to be somewhere between 5 and 6%, so you actually need around $120,000 to $124,000 if you could stretch that somehow. You buy yourself a house, you have a mortgage for $400,000. Your mortgage payments on $400,000 is going to be around $600 for every $100,000. You're talking about $2,400. On $2,400, you're also looking to pay real estate taxes, which is probably, I don't know, depending on what your state is going to be, probably going to be between $300 to $400. And you're looking to pay insurance payments for your house and things like that. So you're probably around $3,000. That's where you're looking at. $3,000, $3,200. But if you're renting one of the families, this is what's called a house hack. If you're renting one of the families, you're probably going to get around $1,500, $2,000 in rent. So at the end of the day, for $126,000, $125,000, $120,000, you're buying yourself a 2-family house. You're living in one of the families. You're renting the second family. And at the end of the day, you're only going to be paying around $1,700 for your mortgage if you take into account their rent. You know? That's it. So that's what I would do. No, I'm not cranky. I'm just being honest, you know? Like, I'll just answer. I'm not trying to sugarcoat anything. I'm just being honest. And that's it. I'm just being myself. So I don't know how I'm being cranky. I'm literally doing a live for 2 hours answering people's questions to the fullest. No bullshit, no sugarcoating, nothing. How am I cranky? I'm talking for 2 hours straight. Let's rock. What's the question, brother? I hope that answers your questions. If you have more questions, just ask me on the Discord. I can't give you advice, but I can give you my scenarios for real estate. I would always invest in real estate first. How much money do you make? The best strategy you could do as a 19-year-old is start some side hustling business. So if I was 19 years old, I would start a print-on-demand business or a drop shipping business is very simple. You open up a Printify, you connect your Printify to Etsy, and then you make a bunch of designs, and then they do everything for you. You don't do nothing. You just collect your money. It takes a while. I'm oversimplifying it, and it takes a while to get started. And then what I would do is I would DCA dollar cost average into stocks for a while. And then I would probably borrow against my stock portfolio when I'm ready to buy a house. So if you're doing $50 a day or $50 a week, whatever you can afford for the longest time, people don't know this. And again, this is how rich people get richer. If you have a stock portfolio, you can borrow against your stock portfolio anywhere. By the way, if you need a link, let me know. I'll give you a link to Webull. I'll give you a link to M1 Finance. I'll put it in. If you guys want to use my link, feel free. It helps me out. I make a few dollars, and it helps the channel grow. If you invest into stocks, you borrow against your stocks, and you buy yourself real estate in the future. That's the way it works. Again, you don't pay taxes when you're taking money out of your assets. So if I was a 19-year-old, I would also learn a skill. So I would do 3 things. Number 1, I would open up a drop shipping or print-on-demand store. It's very easy. You order all your products on Alibaba. You connect it to your Amazon. You connect it to your eBay, and then you sell. Or you do designs like merchandise. Number 2, I'll dollar cost average into the stock market as much as possible. If you want, you could do stocks and you could do cryptos, and then borrow against that in the future to buy yourself your first piece of real estate. You could also buy yourself $50 increments of real estate if you use something called Lofty AI. If you need a link, I'll let you know. I'll give it to you. You can literally invest in real estate for $50 on Lofty AI. And they give you a whole perspective. They manage everything for you. It's really, really good. And the third thing I would do is learn a skill. So the problem is with you kids, no offense, is most people, they play video games. I don't play video games. The last video game I played was Tetris. I would learn a skill. For example, right now everything is internet-based, right? So I would learn a skill of how to edit, how to make thumbnails, how to use Adobe, how to use Adobe Acrobat, how to use all these programs, Premiere Pro, and I would offer my services online. Also, I would learn coding. Go learn a language. Go learn Solidity language. Go learn Python. Go learn C++. Go learn Rust. You could teach yourself, bro. Everything's on the internet. There's no point to pay. Everything's on the internet. And you want to be able to scale a business. One of my mistakes in this life, I had a very successful business. It was moderately successful. I couldn't sell it because the business was me, and I couldn't scale it because the business was local, New York City. I would build a business, which I'm doing now. My YouTube is an internet business. Eventually, if I could scale my channels and I could show people that I have 5 successful channels, then I can teach people how to build channels successfully and mimic my stuff. And I can scale this, right? So that's what I would do if I was you. 3 things. I hope that helped. You said assets other than Bitcoin or cash isn't worth anything. You said assets other than Bitcoin or cash isn't worth anything. You said assets. I don't think I said that. Because they don't make sense to you logically. Intricate pieces of art. Yeah, for sure. Listen, if you buy watches for yourself because you like the watch, it's great. Watches as an investment is a different type of thing. You said assets other than Bitcoin or cash isn't worth anything. Myra assets are a mixed bag, so are you saying I should not count book assets a value of... Oh, okay, I'm sorry, I was mixing it up. So, I'm not saying that you shouldn't count them, but the problem is, once you have a rig, they get outdated super fast. So, every time NVIDIA comes out with a new processor, those old rigs are not producing as much anymore. So, that's a problem. For example, Hut 8, they actually do mining rig maintenance. So they have another business model where they do maintenance besides for that. So if you're counting the rigs, you should count them at a very big discount because those rigs, they lose a lot of value and nobody wants them. Do you understand what I mean? Like, Right now, you can get NVIDIA chips. Nobody wants used rigs because your used rigs are not as efficient. So if you're in the mining game, you don't want used rigs. You want new rigs. So those rigs are essentially useless. It's like if you're a strategist and you need the fast computer. If I give you a computer from 2 years ago and your computer is getting stuck because you have 10 windows open, is your computer worth something? Yeah, it's worth something, but nobody wants that. That's what I'm trying to say. If you got 40K, you can become a very rich man or woman. If you got 40K, you can already buy property in the Midwest. You can buy property in like Kentucky, Alabama, and those states, don't laugh at them. I don't know if you guys are from the South. A lot of people from like New York, California laugh at the Midwest, like the South. Don't. Mad cheap, extremely, extremely good landlord rules. I got fucked in New York and New Jersey and all this liberal bullshit. I cannot kick my tenants out. It's the worst when they don't pay me. But states like Alabama, Kentucky, and like that area, Texas, Florida, great for a landlord. Fucking fantastic. If I was you and I had 40 grand at 19 years old, I would start buying myself Section 8 single-family real estate in these areas. You don't need anything else. You will be wealthy. You will be so wealthy. Trust me. Listen to me. Listen to the crazy guy on YouTube. This is not advice. If I would have started real estate at 19, I started real estate at like 35 after my first property. But let's say 31. If I would have started real estate at 19 instead of 31, I would be wealthy. Not rich, not well off, wealthy. There's something called a BRRRR method. BRRRR stands for buy, renovate or repair, rent, refinance, repeat. That's the BRRRR method. It's a common method when it comes to real estate. You're going to buy something. You can still buy single-family homes at 20K. You could in the Midwest. They're available. Or 30K. You buy it for 30K. You put in another 5-6 grand to renovate it. You flip it. Or you take out more money from the bank. And you keep going, bro. You keep going. You're 19 years old. You don't need anything else. 40K at 19 is a lot of money. A lot of money. 40K at 19 is a lot more than 100K at late 20s, right? It's a lot of money. A lot of money. Don't play video games. Stop drinking. Stop smoking. And just do business. If you hustle from 19 till 30, you will be so wealthy. Wealthy. Real money. Not bullshit money. Not a fact, but you have an ability. Most 19-year-olds are smoking weed, jerking off, playing World of Warcraft or whatever dumbass fucking games, and not worried about finances. You will be so wealthy if you invest that money into the right ways. And you got to figure out what's the right way. I would take the 40K and start flipping real estate like crazy. I would also probably dollar cost average into stocks and crypto and at a weekly basis or a daily basis. But most of my capital would go into real estate. You will be so unbelievably wealthy, especially in the next 6 to 36 months. There's going to be a wave of foreclosures and where banks are going to be selling properties. Why do I say 6 to 36 months? Let's think. In the next 6 months, property values are going to go down. People are going to be selling properties. These are natural people, me, you, regular people that need money. I just sold my Jersey property because I got shellacked with the markets and I needed money. And now I'm good again. So there's going to be a lot of people like me that you could pick up deals for. But after 6 months, the banks are going to start foreclosure proceedings. And between now and the foreclosure proceeding of when the bank actually owns the property, there's going to be a short seller's opportunity, which means that you're short selling a property before it goes to full foreclosure. You have a lot of opportunities with 40K to buy properties in the Midwest. Why people care about watches in 23 your phone has unless you are doing it purely for flex. Okay, I will tell you why. When you're going to go into a room with wealthy people, most wealthy people have nice things. Most wealthy people are going to have a nice watch. To have a nice watch, as Gabe said a little bit earlier, it is a nice piece of art, first of all. Second of all, when you have a nice piece of watch, a nice timepiece, and you walk into a room, you can then start a conversation. When somebody comes up to me and they say, "Oh, is that a Sky Dweller?" "Yes, it is." "Oh, wow, I love the Sky Dweller." "Oh, nice. What watch do you have?" "Oh, I got a Daytona." "Wow, beautiful. Well, what do you do for work? What's your industry? What's your field?" All of a sudden, you have an icebreaker. You can make deals. And this is how deals happen. That's why a watch, a nice timepiece, is important. Plus, to a lesser extent, it's a status symbol. You work all your ass off, all these years. You want something nice, right? Anybody that says, "I don't want nice things," cannot afford nice things. Anybody that has nice things can say, "I can afford nice things." The stupidest thing you can do is take a watch and do a bust down. If you do aftermarket diamonds to your watch, you destroy the value. That's why people have watches. My watch is not even like zinc to time. I don't look at it for time, to be honest with you. It's a status symbol. It's a piece of art, and it's a great way to speak. It's a great way to speak. It's an opener. So if somebody has an expensive timepiece, they did something in their life, and maybe this is somebody you want to surround yourself with. At the end of the day, your worth is the sum of everybody around you. If the people around you ain't shit, you ain't shit. And I'll tell you one thing. If everybody around you has Rolexes, APs, and Pateks, they are the shit. They're not ain't shit, they are the shit. Which means eventually you will be the shit too. Does that answer your question? Another whole trade is judging someone else's likes negatively because... Yeah, I didn't mean to come off like a dick. If I did, I apologize. I thought you were talking about strictly for investment purposes. So I apologize if I came on too strong. I didn't mean that. I sincerely apologize. I should be making 150K. You already, then you're doing good, bro. Like I told you, if I was you, if I was 19, I don't want to say if I was you. If I was 19 and I had $40,000, I had no money at 19. I grew up really, really poor, really broke. Me and my sister, my mom, single mom, immigrant family, came from Soviet Union. So I had to work everything. And one of the reasons why I worked hard is not to be in that situation again. You at 19, you have a very, very generous amount of money to start. If I had $19,000 if I had $40,000 at 19 years old and I was just starting again, then I would definitely get into real estate. I like their anticipate. Yeah, absolutely, 100%, bro, 100%. Their art, they're really, really nice. They're really, really nice. I like art. I like watches. And they're a good investment. I don't really know. I would take whatever their rigs are valued. I would divide it by half, at least. So if they're saying that their rigs are valued at 100,000, I would say they're worth 50,000. It's very hard to sell them. Nobody wants them because look, the major mining companies are going to want to get the best rigs. That's all I'm saying. Yeah, because these rigs, like I said, they're going to have a hard time selling them in the open market. And if they need to sell them, for example, if there's a bankruptcy, they're going to sell them for cents on the dollar, like 10 cents on the dollar. A Rolex milliglass? Yeah, that shouldn't be a problem. That shouldn't be a problem. The problem is how you're going to pick it up. Are you going to come to New York? I don't know how to get it to you. For real, I thought I was decent. You are decent. You are beyond decent. You are more than 95% of America. However, the young man that has 40,000 at 19 is a 99 percentile. 99 percentile. You're at the 90th, 95. You're doing fantastic. You're doing really, really good. If you have $100,000 by 29 years old, you're doing extremely good. However, if you have 40,000 by 19, he's doing better. But it all depends on what you guys are going to do with your money. You have an opportunity and he has an opportunity. Let me rephrase. The reason why the gentleman at 19 that has 40,000, I told him that if it was me, I would be flipping properties. And the reason why I told you, if I had $100,000 at 29 years old, I would not be flipping properties. I would buy a house hack. Why? Why did I give you guys different pieces of hypothetical scenarios? Not advice, not financial advice. Hypothetical scenarios. Let's think about this, okay? Earlier in the live, like 18 hours ago when I started this live, I said that there's levels. At 20 years old, you should be as aggressive as possible by 30. At 30, you should have a method to your madness and not be as aggressive. At 40, you should be moderately aggressive. And at 50, don't be aggressive at all. And that's where you are in life. If you have $100,000 at 29 years old, you worked very hard to accumulate that, and you don't want to lose it. So you don't want to take a risk of flipping properties because you don't know what's going to happen in the market. You want a house. You want to be risk adverse. You want a house. That's why I said if you have $100,000 at 29 years old, buy a house hack, right? I'm not just talking out of my ass. What I'm saying makes sense, and I'm so glad that this live is going so you guys can see what I'm talking about. If you have 40,000 at 19, you can be as aggressive as you want. Why? Let's say worst case scenario, this guy loses his money. He's 19, bro. He's 19. Chances are you're probably still living at home. You don't really got bills. He's 19. He has so many opportunities. If you lose the money, you can make it back. But at 29, if you lose the money, you're not going to be able to buy yourself your first piece of property. You're not going to be able to recover. That's why at 29 years old, you should be buying your first house. My pleasure. I hope it helped. What side hustles do you do? YouTube. YouTube is a side hustle. YouTube. But for me, YouTube is more of a business media company. But it's also a side hustle. Everybody should open up a social media account. Why not? You make money. Why not? Why would you not do this? Simple. Easy. Bro, you invest smart. That's a great move. I'm glad that you co-signed it. Bro, that's the way it goes. At 20 to 30, be as aggressive as you want. But as you're getting to 30, you need your first house. By 30, you should have your first house. Now, that doesn't mean 30 exactly. It could mean 28, it could mean 32, it could mean 35, it could mean 25. But around 30, in my opinion, you should own one property, at least one property. And it should probably be your own personal house. But until that age, you should work as hard as you can to make money. Now, the gentleman that has $40,000 at 19 years old, he already beat the game. He just needs to not lose. You know, you just got to keep playing the game. It's your game to lose now. It's not your game to beat. And he'll be okay, you know. Bro, you're rich. If you had $1 million to invest on H-bar, you're rich. So I'm assuming you shorted it and you lost it. Is that what you were saying earlier, if I'm not mistaken? But if you had $1 million to put into H-bar, you're rich. I don't know what happened to your $1 million, but yeah. You're doing great. If you were in a position in life to have $1 million at 28 years old, you're good. I did not have $1 million at 28. I did not. So you're good. 1 million H-bar. Let me see how much is 1 million H-bar. Calculator. 1, 2, 3, 1, 2, 3. 1, 2, 3, 1 times, what is it, 0.05? 50K. Okay, you're good. You're not rich, but you're good. Guys, please subscribe to my channels. I really appreciate it. If you guys want more knowledge like this, join the Discord. It's free. Look how much information I give for free. I'm not charging you guys with anything. Feel free to come on my Discord and ask more questions, bro. And you already know I'm certified because I'm Jewish, if you guys want to talk about finance. I'm automatically qualified because I'm Jewish. Guys, I will talk to you guys. How old are you? And how much money do you make? How old are you and how much money do you make? Bro, don't you guys love me, bro? Like, I don't go nowhere. I'm answering all questions. All questions. How many YouTubers do that? You know what the other YouTubers would say? Yo, give me a donation. Give me a donation. Okay, if you're 33 years old and you are unemployed and you have $4,000 in your bank account, I'm going to tell you exactly what to do. Okay? Do not spend that $4,000. Do not buy crypto. Do not buy stocks. Because you need a reserve. Your reserve should be at the minimum 3 to 6 months. I don't know your situation. I don't know if you're paying rent. I don't know your bills. But it seems like a very small amount of money. I also don't know if you will get a job in the future or not. I don't know your situation. If I had $4,000 in my... If I had $4,000 in my bank account, I was 33 years old, and I would be unemployed... This is exactly what I would do, me personally. I would never play a video game in my life. I would never go out again. I would 100%, I'm not trolling you, I'm telling you the truth. I would 100% be on YouTube all day long learning a new trade. Learn a trade like coding, learn a trade like Adobe something, and start offering your services on Fiverr or Upwork. For example, make thumbnails, video editing, music editing, whatever. Like, I could make money on Upwork and Fiverr doing video editing. So that's the first thing I would do. Learn something, a trade, and offer that trade on Fiverr and Upwork. Specifically, learn something that you can offer on Fiverr and Upwork. That's one. Two, I would start a print-on-demand store where you learn the trade of how to make designs, and then you make designs, you put it on merchandise, and you sell it on Etsy. You cost no money. It costs you like $100 for a Canva so you can make designs. If you need a link, I have it in my description. I'll give you a link. And that's what I would do if I had $4,000 in my bank account. Never go out. Don't play video games. Learn a trade. Learn a specific trade that can be applicable to Fiverr or Upwork. Start a drop shipping business or a print-on-demand business. Drop shipping is easy. You order stuff on Alibaba in wholesale. You make a website on Shopify. You promote that website, which you'll need that $4,000 for. People buy, so on and so forth. I'm oversimplifying it. Merchandise costs you nothing to set up. Like, I'm talking about maybe $200. Also, I would start a YouTube channel. I would literally start a YouTube channel and call it the Unemployed Man. I'm not even lying to you. You need something catchy. And if you start a YouTube channel, you could be like, yo, listen, this is my journey. I'm 33 years old. I'm unemployed. I don't know what I'm going to do with my life, but I have $4,000 in my bank account, and I really want to make a comeback. I was listening to this idiot. Adam Bergman. He gave me a suggestion. He told me to open up a YouTube channel. So I'm here opening up a YouTube channel, starting a new skill, and I'm going to walk you through my process. People love that shit. Listen to me. Start a YouTube channel. It costs you nothing. All you need is your cell phone. You can find so many editing applications for free. Start a YouTube channel. That's going to be your first video. I'm 33 years old. I'm unemployed. I have $4,000 in my bank account. Some guy, Adam Bergman, who has a YouTube channel, told me to start a YouTube channel. So I'm starting a YouTube channel, and this is my journey. That's your first video. Your second YouTube video, you're going to show people how you're setting up your skills. You're going to say, hey, I'm going to try to learn how to use Adobe. I'm going to learn how to use Photoshop. I'm going to learn how to use Premiere. I'm going to learn how to use Rush. I'm going to learn how to use Canva. These are all programs. He's trolling me. Ha, okay. That's okay. Oh, man. All right, man. Yeah, my moderators are a little slow to act. That's okay. I try to give honest advice. Hypothetical scenarios, not advice. You know. I got caught by the troll. That's okay. I still choose to answer. That's all right. You know. Bro, once I get money to spend, would have no issue buying you a flight. A flight where? Bro, get your CDL 100K a year. Yeah, that's also good. Your driver's license. Take care, Gabe. Have a good one. Guys, I'm going to get out of here. I'll talk to you guys later. Bye-bye.